Let's head on over now to the Johannesburg Stock Exchange, where our very own Bright Khumalo is standing by, of course, from Vestect Asset Management. Bright, thank you so much for the time, but the picture, I guess, on the local front is one of keen interest when one considers the reorganization of stocks we sort of had last week, SABC falling out, Process being a massive inclusion, I suppose, in the market overall. Does that really change anything outside of portfolio investments and weightings?
No, it doesn't really change much, but it does provide, the diversification that those managers that were complaining about Naspers being the biggest contributor there in terms of the SWIX and the top 40 there. So they don't have, a lot to complain about now because it's now two companies, they're separate, and they're below that, 12% mark or whichever mark made them feel uncomfortable in the first place. But going back to markets, we saw last week, the all share, like you said, closing up 1.18%, sorry, down 1.18%. After, being range bound basically for the whole week, even though on Friday we closed up, on the green, so that didn't really help us much. But some of the drivers, like you were saying, it was, that oil price, which I see is at $64, per barrel. As we don't know how long it's going to take to replace, those parts, those intricate parts that are made in Italy by Saudi Aramco there. So it's going to be very interesting how they monitor the situation and how, they curb, potential destruction of that asset from these, militants there, the Houthi that I'm referring to there in Saudi Arabia. Looking at local markets, this week we're also down about 1.5%. The only thing that's really green were, gold miners, like you said, as the gold price goes above 1,500 again, per ounce of gold. People are just, rushing for those safe haven assets, and gold is that, and that all that glitters today is that, basically.
Yeah. Well, all that glitters isn't necessarily just gold when one considers that, yes, Airbnb is looking to now list, but considering that WeWork has delayed their IPO,
yep.
Is it a bit of an unsafe market perhaps right now?
So the Airbnb said they're going to list in a very short, like half a paragraph thing they posted last week on Friday. I'm quite excited about Airbnb. It's a very, capital light business model where, all the onus lies on the, owner of the property himself to make sure that his property looks pretty, it's well maintained, he pays his rates, taxes, etc., etc. And all Airbnb does is link, the owner and the potential traveler and the person who's going to be, a temporary tenant for those 3 to 5 days or however they book the place for. I mean, there's been over 10 million listings there, 100 million listings there, of which 18.9 million visits this year all the way to June. We've seen the company has been profitable from 2017 and 2018. Those financial years have been profitable on an EBITDA level, and the company has only raised 4.4 billion, and the last time it was valued, the last time it raised capital was 2017 at a valuation of 31 billion US dollars, which this could easily fetch something like 60 to 70 billion US dollars today, as they make now over $1 billion a quarter in terms of revenues there. It's a very exciting company, unlike the contra you were talking about, which is WeWork, which had to scrap the IPO of 47 billion US dollars. They have that to about 20 billion US dollars. Still people are still very skeptical, and funny enough, this is a company that has raised more money than Airbnb. Here, this company has raised over 12 billion US dollars, and they continue to lose about 700 million US dollars a quarter. And they, talking about scaling the business to get to a point where it makes money. It's not even close for this company. And now the news is that the board members are unhappy about that company, especially certain investors, including SoftBank's Masayoshi Son, and his appointees in the board. They're looking to oust Adam Newman in the company that he founded. So, and we've heard that Adam Newman is quite a bad actor himself. There's been many cases against him, of which we won't have time to discuss all of them here in this show.
Yeah, well, I suppose one of the other things that many would be interested in is if it was rated at that price, 31 billion back in 2017, what is it exactly that they're trusting with regards to Airbnb if a company, as you said, like WeWork, isn't managing to get up even as much as that either? So if that one fails, why would Airbnb stay? What is there that's perhaps a trusting factor within that stock?
No. So it's very simple. You have a company that can't benefit from scale, which is proven that they didn't get benefit from any scales, which is WeWork. And you look at, in terms of their business model, it's a broken business model. They lease buildings, on a long-term basis, and then they rent them out on a short-term basis, and they take the contractual risk, that differential risk on the contracts, which is not good, because the average person apparently at a WeWork office, it's about 8 months to 9 months. So between there, that's where the average lease period there for the people that stay there, while these guys actually lease these buildings for on the long-term basis, from the money they get from the bank, from their funders, etc., etc. It could be anything between 5 and 10 years. So it's not good. It's not a good business model. Whereas if you look at Airbnb, on the other hand, it's the software that connects, like I said, the owners and the potential people who stay in these businesses, and all of the property risk has been transferred from Airbnb themselves into the owner. The owner is happy taking that risk because it's a property probably they were not using, or it's a holiday property, etc., etc. Now it's going to make them money instead of actually being cash negative previously. So it makes sense to list it on Airbnb. So that's a big difference between the two companies.
Yeah, well, certainly does get more and more interesting. Even the likes of Vestect seemingly suffering, if we were to focus a little bit more on the financial front as well there. Do you have any sentiments, any thoughts around that? Because it seems like because they don't necessarily have a sense of transactional banking, that things are a little more difficult for Vestect when South Africa's economy also struggles.
I mean, Vestect is deposit taking, so don't beat them up too much on that side. But their British business hasn't really done a lot in terms of shareholder return. It's always been the South African business on the banking side that's always been bringing all of those profits. But the asset management business, especially in Europe, the one that's run by Hendrik du Toit, it's always done exceptionally well, and again this time around it came and saved the day, because I think the earnings that they say they expect to be down between 4 and 7% would have been down worse had they didn't have that asset management business. So it's going to be very interesting to watch this business as it goes through that managed separation, and Hendrik du Toit takes his asset management business and runs that fully, and then Fani Titi takes the banking side of things. But the biggest reason why the earnings detracted in that side is because they're still suffering from those Brexit woes, and obviously the South African market is slowing down as well, so it's not really helping with their earnings offshore as well. So when you put those together, you just get one ugly picture. Yeah,
good luck to Fani Titi, though. It seems like it's going to be a tough one for him. Right, thank you so much, bud. Appreciate it. Always great chatting to you live from the Johannesburg Stock Exchange.